right, what's up, everybody? So I didn't think I'd be saying this, but who would have thought that the real estate market could actually get worse? But here we are. The Real Estate Board of Greater Vancouver, now known as Greater Vancouver Realtors, just published their stats. In January, came in at 9% sales to active listing ratio. It was 10% in December 2018. The last time it was this bad was September 2012. And the worst sales to active listing ratio was November 2008. We all knew that was a big financial crisis back then. I really didn't expect this. I'm very fortunate enough to still be very busy doing transactions in my business, but this is taking all the data from all the realtors, nearly 14,500 realtors in the Greater Vancouver Realtor market, which is Vancouver, Richmond, Ladner, Tsawwassen. These stats are so bad. Okay, so let's look at the Detached, see what's going on there. Oh man, yeah, this graph is very similar. Oh my goodness, 6% sales to active listing ratio. That is the worst since January 2019, September 2012, and then again, the worst absolute market back in November 2008. This is wild. This is really mind blowing right now. More listings are supposed to hit the market. And I mean, that's the problem. We could be seeing more sales activity happening on a daily basis, but we have so much inventory on the market right now. So I always use Tsawwassen as an example. We usually hover 80 to 100 listings for detached homes at any time. Last year, that number got up to 205 listings. I think it was in July. And so that's when the sales to active listing ratio can get a little bit skewed, because obviously if there was 100 listings for sale in Tsawwassen and there's 6 sales, that's a 6% active or 6% sales to listing ratio. But if there's 200, then it's a 3% sales to listing ratio. So these numbers are down, but it's relative because we're in a high inventory market right now. So I'm going to look at the prices here. I'm just going to pull that up. HPI. Yeah, prices just keep going down. So the HPI in December 2025, 1,879,800. And we're already down nearly 30K. We're at 1,850,800. So prices are continuing to come down. 30K is not huge as a percentage wise, but 30K is 30K. That's not a small amount. We're down, these numbers back at the height of the market, April 2022, $2,084,600, 235K from the height of the market. That's the HPI. So that's all detached properties in the Greater Vancouver market, the home price index. I'm honestly stunned right now with these stats. I didn't think it could get worse, but here we are. And I'm sorry I'm laughing. I wasn't really into all these stats earlier on in my career, but the more that I consume about this gives me a broader scope about what's going on in the market. And you can ask 100 realtors, hey, how's the market? If we go to a social event, it's literally the same question anytime you see anybody you haven't seen in a while. It's how's the market? And us as realtors, we always say, what the heck? Why isn't it ever, how's the realtor? Nobody ever asks us how we're doing. It's always, how's the market performing? So things are rough right now. We can go over to apartments now. My screen is saying crunching the numbers. Oh yeah, this is just awful too. 10% sales to active listing ratio, matching back again. April 2020, not a lot of people were buying yet. And then obviously in 2020 during the pandemic, things spiked all the way up to 67% for sales to active listing ratio. So that shows you the difference between a high demand, low inventory market. Things have completely flipped now where we're in a high inventory, low demand market. And let's look at the home price index. Yeah, things are not looking great there either. December price is 710. So they've only come down a little bit now, $705,000, we'll call it, just to round up a little bit. So, things are down a little bit too. $5,000 to a homeowner is everything, especially when you're selling, because you're using all the equity in that property that you own now in order to buy the next place. Most of my clients are using every single penny of equity that they've built in their current residence that they've been in for 5 or 10 years. Then they're taking that and forming that to be their down payment on the next place that they're upsizing to. All right, let's look at townhomes. Townhomes are now at $1,043,400. If we look at December 2025, $1,056,600. I hope you guys are liking this style of video. Like, the more I do content like this, the less I want to edit anything out. And like, I'm not really doing any post editing anyways, but I feel like it's much better to get my actual reaction in real time. So I hope you guys appreciate this. There will be screw ups. I'm not perfect with my words, and it's funny listening to yourself a little bit in the headphones too, but I'll do the best I can here, guys. So I hope you stay with me on this one, because this is really important information on how the market is performing right now. Price per square foot actually saw a little bit of an increase, but it's so nuanced, because you can have condos that are 1,300 square feet and sell for $700K. And then you have brand new 2-bed, 2-bath condos that are, 800 square feet that are selling for $650. So that number is something to look at. And we're always looking for recent comparable sales if we're putting a price on a home. But in terms of this and the medium price per square foot, it's a mixed bag to look at that. Oh, let's dive into good old Tsawwassen. Let's dive in here, see what the heck is going on in my community that I'm in. So HPI price, let's see here. 1,125,000 for the home price index for Tsawwassen in December. And that's a similar thing to the price per square foot, because in Tsawwassen, you could have homes ranging from, $1 million up to 2.5. And we have such few sales month over month that this number can bounce up and down so quickly. Like, let's say 1 month, 5 properties sell, they're all priced at 1.5 million. The next month you could have 5 sales and they're all 1.1 million. So the home price index for smaller markets is something that you really got to take a step back from and get more data over a longer period of time. But the trend here on this chart, same like every other market, kind of April 2022 was the absolute peak of the market, and we are down significantly from then. Prices have come down basically 200K since the height of market back then. And a lot of properties went down even further. Once again, this is just kind of a broad scope here. Okay, we got sales to active listing ratio up on the screen now. Tsawwassen is worse than the rest of the Vancouver market. We're at a 7% sales to active listing ratio. That is as bad as March 2019. And oh my goodness, back in 2009, January, 2% sales to active listing ratio. So that means if you had 100 homes on the market, only 2 homes are selling in a month. So that's for all property types in Tsawwassen. So that's condos, homes, and townhomes. It's everything. Let's look at just the detached housing market. 6% sales to active listing ratio. Awful. Yeah, and we have a lot of listings right now. Apartments, 10%. Townhomes is a little bit better. 12% sales to active listing ratio. I sold a townhome in Tsawwassen. I'm going to be in negotiations on another one, probably on Tuesday, Wednesday. The condo market and townhome market here is still moving, but you have to be priced so much lower than 12 months ago. Like, townhomes in Tsawwassen that were going for $850 a year ago are going for $750 right now. Places that were going for $1 million are generally selling for under $900,000 now. And finding buyers is more difficult than ever. The market is really controlled by supply and demand and buyer sentiment. And so when buyers are confident, that means sentiment is high. And right now the sentiment has just been low for so long. And, we're going through a roller coaster. The stock market, cryptocurrency, everything over the last couple of weeks has been very, very challenging, to say the least. So there's not a lot of confidence in consumers out there right now across any board. I know restaurants are hurting. Obviously, realtors are hurting. And that means trades are hurting, from everybody from an electrician to painter to people that have their own general contracting business. So real estate counts for like 40% of the GDP here or something crazy like that. But that's because of everything that they include in that, from construction to permits to plumbers to all the way to interior designers, the framers, everybody that's involved in a real estate transaction. Like, for me, I have several bills for every single listing I take, right? So get a staging consultation with my stager. That's one person. Floor planner. That's another person. Get the property cleaned either before the listing or when we hand it over to the new owners. Then I have my media guy. And so there's 4 people right there. a lot of the times I have to bring a painter in. That's 5 people that I'm giving work to for every single real estate transaction I do. And then when I get the carpet cleaned now for all my listings as well. So that's another. So that's 6 people guaranteed that I'm hiring for one single transaction. That also means a lawyer's getting involved. That also means I'm involved. So we're getting close to 10 people involved per real estate transaction. So it really moves, our GDP. It's a huge factor in all of the business, and it keeps our economy going. So when things really slow down about real estate, it's felt across the board. Yeah, it's tough to put into words sometimes. Like I'm in a great situation where I have a lot of past repeat clients, referrals, things like that. But 70% of realtors last year in Canada didn't do a single transaction, not a single transaction. And most brokerages that these realtors are with, you're working off a monthly fee or a monthly fee and a split or just a split. So it's wild. Like when I was with Remax, I think my fees were anywhere from $800 to $1,200 a month. So think about it. If I didn't do a single transaction last year, just to pay my brokerage to have my license there, plus our licensing fees with BCFSA and the real estate board, you're looking at $15K easily. If you take on any listing, couple grand easily for every single listing, whether it sells or not, just to get media, floor plan done, get the prep done. I think I'm spending closer to $4,000 or $5,000 on every single listing within the first few weeks of it being on the market. So expenses are high. Realtors get a lot of crap online for they make so much money, they print money. I have 17 messages to respond to in a couple group chats. Now, those aren't always clients, but I have other clients. There's 4 notifications in my messages. I started recording this video 10 minutes ago or something like that. And I always want to do as good as a job as possible for all my clients. I want to be there for them as much as possible. But I think the general public doesn't know that this is a very on-demand job. I try my best to, have some restrictions to when people are able to reach me. But if I'm available, I'm going to respond. So I wish the public wouldn't hate on realtors so much, but I guess that just comes with the territory. People watching too much Selling Sunset and thinking that's our job. Oh, man. Anyways, I think that's really it. Basically, this January is off to a pretty slow start. It was a pretty crappy month in terms of weather. I feel like a lot of people's moods were also down. I think 7 listings appointments I've taken in the last 10 days. 3 of those listings are coming to market very soon. Got media done on 1 today. Got another one tomorrow. And then doing some longer term planning with some other clients of mine as well. They're going to do some upgrades to their home. They may be selling this year or next year in 5. But the overall feel in the community, I felt like it was down in January. A lot to do with the weather, of course. So we don't know. If February is beautiful out, people's plants start growing, blooming, maybe in March, I think there'll be a better vibe out there just in general. And hopefully, the stock market settles down a little bit. Whatever's going on in the world can settle down a little bit and give people some more confidence to get back into buying and selling real estate. So, I'm still hopeful that we're going to see more transactions happen in 2026 compared to 2025. But with that brutal of a start to the year, who knows? Anyways, I'm Blake Chancey with Real Broker. Hope you guys appreciate the video. Make sure to like, subscribe. Appreciate you all. Take care. Peace.